Don't do it, Mr. Hamilton. Stay free of TikTok. Thanks, Mr. Irvine and Mr. Dooley for coming today. I'll be asking a few questions about digital payments and so on and so forth. You're a co-owner of Australian Payments Plus, is that right?
That's correct.
Yeah, and you've got someone on the board. So all the big four banks are and others are. So how did that co-ownership begin? Are you aware of back in the day?
No, well, I think there's been various iterations and mergers.
Yeah.
Typically, in most jurisdictions that I have worked as a banker, big banks are stakeholders in the domestic payment schemes, and that's the case here. And so, as you know, NPP developed over the more legacy payment rails, the bodies merged. But I think it's always been the case that the big banks have been owners of the various organizations that manage and operate the payment rails in the country.
So I would imagine at the start there would have been an investment from the big banks to set it up, to create those payment rails.
That's correct.
Are there any ongoing costs for the banks to keep APP running? Like, do you pay a fee every year? Is it like a membership thing, or are they self-funded?
Well, I'm not aware of the amount of fee that we'll pay. We could probably take that on notice and sort of come back to you on it. But I think what we would say is that all of the banks are investing significantly in the payments infrastructure alongside AusPay and the other payment rails.
So through APP or like separately?
Well, sometimes it's about building additional capability. So at the moment in time, while we have NPP rails today, we've been spending tens of millions of dollars as a bank on enabling Pay2, which is an enhancement to the NPP capability. And so I think the banks are constantly spending money on payment infrastructure to ensure that it doesn't decay, that it continues to be future-proof, and I think also optimizes scams, fraud, and cyber safety. And so while the infrastructure may be built, you can't stand still, and you're constantly adding enhancements to ensure that these capabilities are robust. They also require data and infrastructure, and data and infrastructure cost money to maintain and keep up to date.
Yeah, there's no doubt that there are costs to maintaining a non-digital payment system and a digital payment system. I just want to try and understand how I think having that domestic payment system, digital payment system, I'm just trying to get a bit more of an understanding.
Come back to the committee with,
sure.
If there are annual costs that we would pay to AP Plus, we'll share that.
There are costs per transaction that you pay, so that that APP charge, which you then pass on in some respect to the merchant, which then goes to the consumer, like a per transaction cost. There's that, right?
Yes.
Yes. So
right.
you pay APP a per transaction cost.
We would pay them a transaction cost. We wouldn't charge customers a transaction cost. Customers don't pay to use MPP.
No. So FPOS though, they do.
FPOS they do.
Yes.
But with MPP, we would pay to
That's right.
AP Plus, but we wouldn't charge that to customers.
Why not? Why do you charge them for one and not the other?
Well, we charge, I think, businesses would pay, not consumers.
Yep.
Whereas in card acceptance, as you were highlighting yesterday, there is surcharging in place for consumers that isn't the case on direct payments.
Yeah. Why?
Because that's how it's been implemented by the RBA, I think, in 2003. This is the first country I've ever lived in that has surcharging that was legal. I've lived in the Middle East, the UK, and in both Canada and the US, and surcharging is illegal in everywhere else I've ever lived.
So you pay for per transaction on, like as I'm talking about NAB here, not the one that you pay on your FPOS debit transactions. You pay for OSCO, BPay, PayID, Pay2, and just depending on your product offering, some you pass through to your customers and some you don't. Mm-hmm. Okay. Can I ask what your cost is per EFTPOS debit transaction? Is it a flat cost? Is it a percentage?
Let me see.
We'll take that one on notice.
Yes.
Yeah, we'll take that.
If you can share it, I mean, you might.
Yeah, we'll take that on notice.
Yeah. And would you imagine that cost is the same to all the owners of the system?
Yeah, I believe so. We have simplified pricing for most of our clients that incorporates LCR.
No, sorry, I'm talking about your relationship with APP. So I'm not onto your customer side yet. I'm just trying to understand how the co-ownership works and what benefits there are to you as co-owners for using the EFTPOS debit system and their other products, so OSCO BPay. So is it your understanding that APP charge you per transaction similar to the other owners of the scheme or co-owners of the scheme?
That's my understanding.
Yeah, okay. And is that a flat fee per transaction or is it a percentage of the transaction?
I need to get back to you
sure.
with that.
All right. I just thought I'd ask it again just so. Do you get charged X by, which you'll get back to me on, to APP, when you pass that through to your customers, not through the blended rate? I'll get to the blended rate in a sec. And I'm specifically talking about EFTPOS debit. Is there do you put a margin on that, or is that something that you just pass through at cost?
On EFTPOS, we enable least cost routing to our customers. That's enabled, it's available for 100% of our customers. We're proud of the fact that more of our customers use least cost routing than any other major bank. One of the things that we've done recently, so I expect this to continue to improve, what we've done is we've made a change so that it's now an opt-out approach versus an opt-in approach. So in the past, merchants needed to opt in to avail themselves of least cost routing. Now we're making it the default. So they actually literally physically have to opt out of it for whatever reason that might be the case. And so we're very hopeful that our least cost routing numbers will continue to improve and that we'll continue to be a top performer vis-a-vis competitors in this space.
Okay, but the problem with a blended rate and least cost routing is that, particularly for the consumer, often the EFTPOS debit rate is lower than your advertised 1.15%.
Yeah, and we'll keep looking at that. And so if our least cost routing increases, I would expect that we'll reduce our simplified pricing rate as well.
Do you think simplified surcharging has had its day, given the fact that, nearly we've got some of the highest debit transactions in terms of percentage in the world? Do you think blended rates are...
Well, these things are they're two different things. So one is the rate that the banks and the merchant acquirer charges a merchant. And there, we're enabling least cost routing. We have simplified payments, and we will look to continue to be competitive on the price of that. And if LCR increases, I'm sure that we will reflect that in our simplified pricing approach. The issue of surcharging is a different one, where Australia allows merchants to surcharge to their customers for the cost of that they pay for a payment. Now, what I don't like about surcharging is the lack of transparency and the lack of consistency. Yesterday, Mr. Laxell, you highlighted with a prop the $5 in cash and the $5.08 that you would pay if you used debit. My experience is different from that. My experience is that it's all over the place. And in fact, earlier this year in Sydney, I had the shocking experience of buying a coffee with a 10% surcharge. So I don't know if any of you have experienced that, but that's outrageous.
Yeah.
And so and the RBA has commenced consultation. Wherever this lands, my hope is that it's not consistent. And it can't just be played with in this matter. I personally don't like surcharging, but if surcharging maintains, I hope to goodness that it's simpler, more transparent and consistent.
Do you think that some small businesses in particular pass on this surcharge because of the disparity between what banks charge, merchant providers, and you're one of those, what they charge to small businesses? I think the RBA have... they said it's the gap between the lowest fee and the highest fee on digital payments is wide, 0.2% upward, to upwards of 2%. Do you understand why small businesses would pass it on if it's as high as 2%?
Absolutely. Look, I think surcharging came in a time and place that was quite different to today. Again, I wasn't here in 2003, but in the markets that I was in, the cost of credit card acceptance in those days was much higher than it is today. And credit cards tended to be the predominant payment of card acceptance. And debit cards weren't anywhere near as frequent. So often it was a case of cash that's free or a credit card that's quite expensive from an interchange perspective. Times have moved on quite significantly since those days. It's over 20 years ago. Debit is much more prevalent. We have least cost riding and a domestic scheme that's taking market share. And so it's possible that, surcharging was warranted over 20 years ago, but I think it behooves us to ask whether it still serves its purpose. It's my view that I think it just adds to confusion. It means I don't know what the price of a good is that I'm buying, and I don't like it.
Yeah, neither do I, as you can gather. No doubt. And I just want to be very clear in my questioning over the last few days and today. I understand why there are surcharges for overseas schemes, right? Like, Visa often provide goods on credit. It's their money. They give you 50, X days interest free. There are loyalty points, rewards. Understand there's a cost to that, and there's a brand involved with that. I don't understand why that's same, just like you. I don't understand why in the shift to debit, where we're accessing our own money through a locally owned scheme, I don't understand why in many instances, particularly in small business, where, and I think this is a makeup of the blend, this is a byproduct of the blended rate, where the costs for those schemes, according to the RBA, are significantly lower, but businesses and consumers are still being charged that cross-subsidised rate in that blended rate. So yours is 1.15%, which is quite low for a blended rate, so good on you. It's still higher than what I believe a debit transaction should cost. It's as high as 1.6% on a very popular software and technology provider, which is where I got the $5.08 from.
Right.
So I guess you're offering this blended product where you're using low debit costs to cross-subsidise high credit costs. Do you not have a problem? Like, is that not a concern?
I guess we're taking the variability risk away from the merchant, because if we didn't do that, the merchant would ultimately just pay the rates of their customer base. And I don't know, those may diverge. Different cafes or different merchants may have different mixes of domestic FPOS versus card versus Visa debit, say, or MasterCard debit. And so what we do is try and simplify this for businesses, because they tell us simple is better for them, and they like simple. As you said, we're very conscious in making sure that our services provide real value to our customers, and we're constantly looking at that. And as I said, if our LCR rates continue to go up, I would expect our simplified pricing to reduce. And that's important. We are Australia's business bank. We care deeply about our small business customers, and we want to make sure that they're getting good value from our services.
But I think the points you make is right around it. There's a broader conversation to be had around the payments network more broadly and the different forms of payment. So if we take cash, for instance, the cash is not being used by anywhere to the extent that it has been historically, but it still costs a merchant, or a business owner, a shop, to collect and manage cash. The cost of that cash is not obvious to the consumer, but it's definitely a cost that's incurred by the business owner, in the same way that electronic payments also incur a cost as well. And I think what we need to continue to look at is the economics of the various forms of payment, the amount of investment that we need to keep putting in to maintain those various forms of payment to ensure that consumers have choice whether they want to use cash, whether they want to use debit or some other form of payment, to ensure that we're getting the right investment in those platforms to ensure that it's not only efficient but it's safe, and it's safe for the customers. So I think we need to continue to have that sort of conversation around the economics and the efficiency of the whole sector, and that's certainly what the RBA have.
Do you still think in 2024, with digital payments where they are, and particularly with EFTPOS debit payments where they are, do you still think it's feasible to charge a percentage of a transaction value as a fee, like from across the providers? So from Australian Payments Plus to be 0.5% of the value of the transaction. You know, that's a very small amount at $10. It's a higher amount at $1,000. Do you still think percentage of transaction fee charges are
I think
the way to do it?
I think we'll have to see in terms of how large least cost routing becomes in the total mix. So today, 48% of our transaction flows are not through LCR, and those are through the schemes. And there we do have variable costs. So, you know, we have costs of rewards, costs of insurances, you know, credit risk as well, because they're not debit payments in some cases. But I think as the market changes and moves to more and more least cost routing, I think that's something that we can look at.
And I think one alternate could be flat fees, but that could create some unintended distortions as well, particularly for smaller payments. So we need to look at that carefully.
Yeah, it could. Yep.
Yeah.
When I go on your website and I go to open a personal bank account, it seems like you've got a relationship with Visa for personal bank accounts. Like you only offer Visa debit.
We offer MasterCard as well. We bought Citibank's Australian banking franchise, and they were a MasterCard provider. So we're still in the process of doing the conversion, but I think you could say it'd be 80-20.
Okay. And you've got an arrangement with Visa?
Correct, yeah.
Okay.
And MasterCard, but predominantly Visa.
Yeah, so I'm just talking about your classic banking product, which I'd imagine would be your biggest one for bank accounts for consumers. Yeah. And Visa, do Visa pay you a loyalty fee or a scheme rebate, or does NAB benefit from that relationship with Visa?
Well, the way our contracts work, they're usually 8 or 10-year contracts that we put to market when they come up for bid. And typically the way it works is that when payments are routed through one of those schemes, we would get a rebate on what we pay, what Visa would get on a payment. And then those monies typically are contractually required to be used to improve our products and services. So we would then use those rebate monies on an annual basis to invest in better solutions, better digital capability, new product innovation, and what have you.
Now, when you sign an agreement with a major card provider, do you commit to a certain value of transaction as a minimum?
There are minimums in there, usually, that are jointly negotiated, and obviously there are benefits to the bank in terms of overall amounts.
And do you get better rebates the higher you push through those major card schemes? Is it incentivized that you get push more through Visa than, if just say it's $1 billion, you get X percent. If it's $2 billion, you get a little bit higher. Are they incentivized?
From an issuing perspective, yes.
Okay. So the more Visa you issue.
Yeah. Now remember that there are two. There's a least cost routing and is a acquiring fee, and then there's an issuing fee. And this is talking about the issuing side.
Yep.
So the person with the card, not the terminal.
Yep. So you're incentivized to do that.
But there's also a matter of consumer behaviour as well. So we've got more of our volume going through EFTPOS now than we would in other channels as well. So that's been increasing, the use of EFTPOS debit.
Yep. And that's because your LCR is increasing.
Correct.
And so does that impact your relationship with Visa? Like the fact that you're not putting as much through, like when you eventually get to a higher rate of LCR, is that going to, like...
Well, that becomes a commercial discussion between us and Visa around the terms of the arrangement and the contract. So.
Yeah. But look, we are pushing this. We want to do higher. We've put in opt-outs components. So we're moving forward in a way that we want LCR to be as large a percentage of our merchant flows as possible.
Right. Can I ask why it's taken a while? Because you are the highest, but it's still only half.
The biggest impediment for us was in our high caps business, which is our health platform for it accepts payments, but it also is the primary claim reimbursement modality for health insurance in Australia. And we had a legacy terminal that we needed to upgrade that wasn't LCR compatible, and that's now happened. But it was hard work, and to do that, you have to literally replace every terminal, every merchant. But thankfully, we're through that now.
So, multi-network card with LCR enabled will take the transaction value off Visa because it'll push it through
on an acquiring basis. Yes.
Yep, okay. And will that sort of stop you meeting some of your undertakings to Visa in those agreements, or will that have an impact on those agreements?
I think the primary undertakings are on the issuing side, not on the acquiring side.
Okay. When do you expect those LCR rates to start bumping up? Like the 52% was as at June. Like, do you have any forecasts on when you'll reach 70, 80, 90?
I do not, but I'm happy to present that to the committee. The problem is we don't have enough of a fact base yet because we only instituted that in July 1st. So probably would want to see a little bit more time on how it's actually taking effect. But I'd be happy to provide our forecast as best as we can.
And with your existing merchants, so it's opt-out for new merchants, or it's opt-out for, have you just sent it to all your merchants saying, if you don't tell us by X date, we're going to turn it?
I think it's opt-out for new merchants, but we constantly send collateral and marketing and notifications to existing merchants. I'm not sure if it's feasibly possible technically to do an opt-out on the back book, but again, that's something I'm happy to look at.
Yeah. We've still got that blended rate problem though, don't we? Where you go in and tap, you're expected to be charged, you should be charged a lower rate, but we're getting that cross-subsidisation that other banks mentioned was kind of coming out of the sector.
We're going to continue to look at that pricing and make sure that it's appropriate based on the LCR mix. And by the way, merchant fees have come down significantly over the last 10 or 20 years, and I expect that to continue.
Yep. Yes, so do I. Recently, I think it was a bit of a surprise that Apple announced that they'd opened up their wallet. I think it was only last week. But details are pretty light on. Do you have any understanding of who they'll allow access to, how they'll allow access?
Yeah, no, this is, I think, a bit of a success story for Australia. So up until now, it was only the European Union that had won the ability to access Apple's NFC chip. Prior to that, it had been a complete walled garden. And the only reason that Europe was able to get that was because of the threat of legal action in the courts. What Apple has subsequently done is add 5 or 6 additional jurisdictions where they'll be opening up the NFC, and I think they'll have done that based on their own assessment on the amount of political noise in those jurisdictions. And so they've only done it for 5 or 6 new ones, and thankfully Australia is one of those jurisdictions. And so had we been less noisy, I would expect that we would not have been in one of those, and we would have been in the 200 countries that will still not be able to access the NFC. So I think this is great news for us.
And how will that change how you interact with Apple Wallet, or are details a bit too light on at the moment?
I mean, it's still early days. Ultimately, my expectation is that today the only wallet that one has on the phone is an Apple wallet. And so it's within their wallet and their infrastructure that all of your payment cards and loyalty cards and even identity, frankly, can be stored. So my understanding is that over time, other participants in the digital ecosystem will be able to build apps that could have similar functionality. And be able to essentially compete with Apple's own wallet.
So you'd have a NAB wallet potentially?
Potentially.
Yeah.
I think the details are still thin on the ground. And I expect that what will happen is there will be a significant ecosystem develop over time where fintechs and potentially banks look to see how they can avail themselves and build additional propositions to customers alongside Apple's own propositions.
You pay Apple for access to their wallet now?
We don't pay Apple access to their wallet, but we do pay Apple a pretty meaningful transaction fee
for every transaction.
Every transaction that is used by the phone.
And you build that into your blended rates?
We do.
That's
that's non-negotiable.
Yep.
It's you want in, here's the price. Take it or leave it.
That's adding to costs as well, isn't it? You know, we do have legislation before the Parliament. I would dare say that's probably what Apple is responding to there. I think that's all I have for now. If you could, I'll go through the transcript and I might put those questions in writing. It'd be good to understand about that domestic payment ownership and how we can help drive down those local EFTPOS debit charges.
Thank you, Mr. Lexer.
Thanks. Well, look, we'll have a short break. I'll suspend proceedings and we'll recommence at 11:20.